So 2 days ago, I got a great comment on my YouTube channel. He says, "Bro, can you do a video on BNED? Do you think Barnes & Noble can be the next squeeze?" It's a joke that Barnes & Noble has a $24 million market cap. Now, I have to say, when I saw that, it caught my attention. In fact, I was going to make this video yesterday, but I got caught up in some projects. And just so you know what's going on right now, Barnes & Noble is up 100+% right now. Or is it just about 96% at the time of this writing? Let's see. Well, 99% as you can see here. And the chart is rather explosive. So I first of all have to give this viewer some daps because holy cow, that is fascinating that 2 days ago he left this comment. Now I'm making the video. I wish I made it yesterday because then I really could have nailed this move for my YouTube growth. But hey, let's get right to it because there's a few key lessons in this video that I want to get into, specifically about Barnes & Noble, but also a very important lesson about enterprise value versus market cap. So if you recall, he asked me, hey, tell me about Barnes & Noble. Its market cap is just 24 million. Like I said, Barnes & Noble is a huge brand. I was pretty shocked to see that they had a market cap of just 24 million. Today, it looks like it's back up to 28 million thanks to this enormous move. And I do want you to pay attention to something, though, that's really important here before you get too excited about Barnes & Noble. And this is why markets are oftentimes really challenging. And that is enterprise value. So look at the market cap at 28 million at this point in time, and now look at the enterprise value of 550 million at this time. That is a huge divergence between the two numbers, and it's why a market cap can sometimes be rather deceiving, and that you probably want to use enterprise value more often to understand what is the whole company worth. So before we get into Barnes & Noble and what's going on, let me just quickly remind everyone what market cap is. So market cap is equal to the share price times the number of shares outstanding. So if I, for example, have a company, let's use my YouTube channel, Invest Slow, and I have 10 shares outstanding, and each share is worth $1, well, I can take the 10 shares outstanding, multiply them by the $1 share price, and that's my market cap. It's going to be 10 number of shares outstanding times 1. It means my YouTube channel is worth $10. I only have about 800 subscribers today, so maybe that's not that far off. So that is how you calculate market cap. So in the case of Barnes & Noble, its market cap is 28 million. That means all of these shares outstanding times its current share price equals 28 million. You could make an argument by very quickly saying there are about 27 million shares outstanding, because right now Barnes & Noble trades for $1.07. You can work backward from there to figure out how many shares are outstanding. So you've got all the math in front of you to work through it, and this is why, after all, we learned math, these types of equations, back in the 7th grade, maybe freshman year of high school, or maybe before that, I'm not sure. But you can do this math yourself just like that. And I also have this page on my website. I've been working quite hard on this to provide this type of information. I have an entire deep dive article about enterprise value being better than market cap. I walk you through all of the math and how this works. I show you real examples as well. And then I show you the calculations of enterprise value, which we're going to get into next. So how is Barnes & Noble's enterprise value this massive, but its market cap is just right here at 28 million? Well, here's why. Market cap, recall, is only the number of shares outstanding times the share price. So what is market cap leaving out? Well, it's leaving out quite a bit. Market cap is not including the total debt of a company or the cash and cash equivalents on the balance sheet. Let's talk about both of those things really quickly. If my YouTube channel is trading at $1 per share and there are only 10 shares outstanding, so my market cap is 10, but what if I suddenly told you I have $100 million in my YouTube channel's bank account? This is just an example. I don't have that. I don't think I'll ever get that. It's just an example. Well, is my company still worth $10, or have you just found the most underrated company of all time? Because if you were to buy my company for $10, you would also get access to the cash in that bank account that's connected to the company. So now you can start to see where enterprise value is ridiculously powerful, because it is bringing in the cash and cash equivalents that the company has and the amount of debt. So let me flip that around. What if my company, my YouTube channel, still sold for $1 a share? There are 10 shares outstanding. Well, that is still equal to a $10 market cap. But now I tell you, I have $1 billion in debt. Do you want to buy my company for $10 just to now be on the hook for $1 billion in debt? See, it's probably starting to make sense, right? Enterprise value includes the entire picture here, the debt and the cash. It's not just shares times price. It's got everything baked into it. So while Barnes & Noble has a market cap of just 28 million, its enterprise value is 550 million. Now that means it has a lot of debt, and it probably has debt of about 530 million, because you can just take the difference from market cap to enterprise value. So even if you bought Barnes & Noble right here, all the shares outstanding, you acquired it for 28 million, you would be responsible for all the debt. So this is where enterprise value is so important, so you understand the company's true value. Now, if Barnes & Noble had cash on the balance sheet, well, here's the equation. You can see enterprise value is market cap plus, and then total debt minus cash. So if my YouTube channel, Invest Slow, had $1 billion in debt, but $2 billion in cash equivalents, well, I'd be left over with $1 billion in excess of cash. So the whole point there is that my market cap would be added to my leftover cash. And this is actually how you can spot some companies that have more cash on the balance sheet. So here's a really good tip. If you see a company with a market cap that's less than its enterprise value, it means it has more debt than cash. If you see a company that has a market cap that's greater than its enterprise value, it means it has more cash than debt. And you can do that by working through these equations. In fact, on my website here, on this page I worked on, I walk you through a real world example of enterprise value. You can see this yourself. So here's an example. Say that there's a company that has a $500 million market cap, but it happens to have $200 million in total debt and $50 million in cash. Well, the first thing we want to do is subtract the debt from the cash, and we get $150 million left over in debt. That now gets added to the market cap of $500 million, and our enterprise value is $650 million. So this is some really basic math that you're doing. You're just doing addition and subtraction, but it's often a super important thing in markets because people forget about this difference between market cap and enterprise value. Here's another really helpful tip. The market cap of a company, right, is just the shares times the price. Now think about the name enterprise value and what that means. Well, enterprise value is quite literally what it sounds like, right? It is the enterprise. You are buying the whole enterprise. The whole thing is coming within this purchase. So that is also how you can utilize these two numbers. Now, I'm not saying that market cap is bad, and I'm not saying that enterprise value is this great metric. No, I'm saying you need to understand both and utilize them together. But at the end of the day, enterprise value, and it's why my article here is titled Why Enterprise Value is Better Than Market Cap, is going to give you a more clear picture on what you're buying, because you can get deceived by these market cap numbers if you don't account for debt and all the debt you're buying. Now, what I'm going to do about Barnes & Noble now in this example is actually give everyone some insights maybe into what's going on. Now, first of all, the price is up a lot from what I'm gathering and from what I've been reading, because the options have been going just ballistic. Now, here's what I mean. These are call options on Barnes & Noble. This says strike price of 50 cents. Look at the volume here. Look at the percentage change. Look at the implied volatility. There's been a lot of action recently in Barnes & Noble options, specifically not only in the money, but before yesterday they were out of the money. So in yesterday's out of the money options as well. In addition, it's really important to know that Barnes & Noble is definitely trying to turn this around. Now, what is pretty key here is that they definitely need to make sure that they have their, new age brand heading in the right direction. So what you are going to notice here is this is BNED.com. This is really interesting because it shows what they're doing at the educational level. People forget that Barnes & Noble has a huge plan to get into more universities and schools with its books or its e-readers or anything of the sort. Also, here is the Barnes & Noble investor relations page. So we're going to utilize this page, though, to demonstrate a few things. And you can actually see here on April 16th, they made some announcements about their push into education. There's been quite a few things here. Also, on May 15th, you can see this press release as well, that they have made this registration statement about an offering, and that is probably to get liquidity. And here's why they probably wanted liquidity. Well, what we're going to do now is we're going to go to their latest... We're going to go to some of their latest filings. Let's go to their quarterly results. Because if you go to their quarterly results, you can really get a feel for the situation. And I have a YouTube video actually up about how to read these income statements, also balance sheets. And the first thing I want to say that is rather important here is if you look at Barnes & Noble, they do rather well. They do $456 million in revenue. So they're doing significant revenue every quarter. They are still out there. They've got, chains all across the country. They have got a new web presence. They've got their e-readers. They're trying, right? They're totally trying. So that's great. But are they profitable? And as you work down this income statement, you can actually see that after they make all of their sales, after they pay for their product and other cost of sales, their rental cost of sales, so you add that all up, they do come out with $100 million in gross profit. But here's where things do get kind of tricky for them and why they're not profitable. Selling and administrative expenses is $79 million, and you can just see depreciation and amortization, impairment, restructuring. They come out, after interest expense, they come out with a $9 million loss in the last 3 months. Now, this is interesting. Interest expense. Think about debt. Remember, they have more debt on their balance sheet than market cap is showing, but enterprise is. That's how we know that. They are paying a considerable amount in interest expense, so maybe if they can fix that, they can quickly get back to being profitable. But this is probably the issue at hand and why Barnes & Noble is down in the first place. And even worse, their cash and cash equivalents is about $8 million. So if you're losing $9 million every 3 months, but you only have $8 million in cash and cash equivalents, well, you might be in some financial trouble because how are you going to cover your debt in the next quarter? They do have some assets, though, that they can maybe tap into. They've got quite a bit of merchandise that they need to offload, that's for certain. They've got some receivables as well here that look rather large, and they essentially have some assets that they could probably put to work to raise more cash. They might even have to sell shares to raise more cash as well. But right now, the retail community and trading community is loving this price action because Barnes & Noble has been on a rip. And also, sometimes when these companies do fall this low, they gather the necessary attention. But there is one other very important thing about Barnes & Noble, and that is the fact that they are also truly trying to take their company to another level, and in many different ways as well. So what do I mean by that? Well, it's really important to know that Barnes & Noble is, let's see here, let's go to their website really quick, Barnes & Noble. You can see that they've put a lot of time and effort into their web presence. Of course, Amazon is here as well, but you can really just see everything that they're doing. They have got tons of interest and effort into books. They've got physical stores, but they're also pushing still into ebooks, into audiobooks, into different age demographics. They also have toys and games as well, whereby they're selling things like the latest Lego sets, puzzles, all sorts of those aspects. They've got stationery and gifts, and they've also got music and more. So what exactly are they going for here? Well, this is pretty fascinating what they're doing. And actually, this takes me to another point, the new Nook. So they are still pushing into the e-reader market as well. They were ahead of this, by the way. They were doing this 5+ years ago. I've never used a Nook, but I commend Barnes & Noble for just going for it. Looks like it runs on Android, but essentially the company is positioned correctly. Now they just need to keep turning the ship around. So they've got the brick and mortar stores, they've got the brand, they've got the Nook, they've got the distribution, and now they're expanding to new products. Who's to say they can't just build a marketplace similar to Amazon? They're already selling toys and games, stationery and gifts, music and movies, so they are really going the direction of being sort of an all-encompassing online seller of goods while still maintaining their physical presence and even pushing into the market of e-readers. In a way, you could make an argument that they are just essentially trying to flip the script now and go after Amazon. Can they do it? Well, that's a really tough challenge. Amazon has just totally penetrated the market that they're involved in. But Barnes & Noble, at the same time, is clearly demonstrating that they have an investor base behind them too. And here's what I mean by that. Well, on my YouTube channel, you can see this price action here. Just 2 days ago, I got this comment. Someone specifically asking about Barnes & Noble if it could be a short squeeze. Look what's happening today. They have got the audience there. People are watching closely. So I don't know what's going to happen to Barnes & Noble in the future, but this was the video and real example I wanted to provide to everyone, my subscribers, to the people who leave me comments like this about the situation, and also use it as a point, a really important point in time, to ultimately compare market cap to enterprise value and why they matter. And this type of process you can utilize in your own research. And if you want to learn more about enterprise value and market cap, as mentioned, please check out the link below.